Good morning and welcome to Economy and Markets, where we give you comprehensive insight into what's happening in the financial markets. I am Nneoma Ogbonna, your host. Before we get started, let's look at some of the business news making the rounds. The headlines. Leadway Assurance partners Ecobank to expand access to insurance solutions. Linkage Assurance shareholders receive bonus issue as revenue surges 50% in 2024. Boas Cement, NML were lead gainers as NGX rallies 0.50%, year-to-date return hits 40.68%. Nova Bank seeks to change operating license from national to regional bank. Coronation to list infrastructure fund on NGX after record capital raise. Foreign investment into Nigeria soars by 67% to $5.6 billion in Q1 2025. Now let's begin the news here, where Nigeria's leading insurance provider, Leadway Assurance, has entered into a strategic bank assurance partnership with Ecobank Nigeria Limited. The alliance aims to deliver integrated insurance offerings to Ecobank's employees, customers, and small business owners, embedding access to life, health, motor, and home insurance directly into banking touchpoints. This move is positioned to advance financial inclusion and make insurance more accessible to Nigerians. According to Leadway's Director of Sales, Retail and Partnerships, Kike Fisher, the collaboration is about simplifying insurance and making it a part of everyday life. By leveraging Ecobank's vast network, she noted the initiative will bridge Nigeria's insurance gap, offering customer-focused solutions right where and when people need them most. Ecobank's head of distribution channels and sales, Ademola Ogunyemi, added that the partnership supports the bank's vision of creating a one-stop hub for financial services. The rollout will begin in select Ecobank branches nationwide, with trained product champions guiding customers through options such as group life cover, personal accident insurance, and term life policies. Also, Linkage Assurance PLC has posted a robust performance in its 2024 financial year, with revenue rising 50% to 22.2 billion naira from 14.84 billion naira in 2023, despite a tough operating environment. At its 31st annual general meeting in Lagos, the underwriting firm reported a slight 3% drop in profit before tax to 5.3 billion naira, alongside a 5% increase in investment income and other revenues to 9.48 billion naira. Total assets climbed to 65.68 billion naira from 51.33 billion naira in 2023. Chairman of the board, Joshua Fomodo, credited the results to sound executive management, underwriting discipline, prudent investments, and strong corporate governance. Shareholders approved a 1-for-5 bonus issue amounting to 1.54 billion naira, capitalized from retained earnings in anticipation of possible industry recapitalization. They praised the board's decision, noting the company's resilience and capacity to meet claims. Managing Director and CEO Daniel Bray attributed insurance revenue growth to expansion in motor, fire, oil and gas, marine, and general accident lines, supported by broker-driven distribution. Insurance service results surged 193% to 766.9 million naira, while claims paid totaled 4.58 billion naira, reinforcing the firm's commitment to honoring obligations. Moving on, Nigeria's stock market rallied for the second time this week, gaining 0.50% on Tuesday as investors snapped up shares of top-performing companies. The all-share index, ASI, rose to 144,796.37 points, while market capitalization rose to 91.61 trillion naira. The market's year-to-date return has now climbed to 40.68%. Boas Cement led the gainers, surging 10% from 155 naira to 170 naira 50 kobo. Nigerian Animalware PLC and Need International Pharmaceuticals also recorded 10% gains, closing at 29.70 naira and 7.70 naira respectively. ICO Insurance and Mutual Benefits Assurance joined the top advances, with both stocks gaining 10% each. Analysts at Vetiva Research say the bullish trend is supported by lower interest rates and dividend expectations, but advise caution after the sharp rally. Trading volumes sold at over 1 billion naira shares worth 22.84 billion naira in 308.93 deals. Active stocks included ICO, Fidelity Bank, Universal Insurance, and Veritas Capital. In other news, Novo Bank has announced plans to transition its operating license from a national commercial bank to a regional commercial bank, in a strategic move aimed at optimizing operational efficiency and focusing on key markets. The bank said the shift will consolidate strengths, streamline services, and enable more effective capital deployment. It is applied to the Central Bank of Nigeria, CBN, for the license recategorization following a review of its growth trajectory and capital strategy after CBN's revised recapitalization directive in March 2024. Acting Managing Director and CEO Mrs. Chinwe Ilogalu described the decision as a prudent approach to sustainable growth, noting that shareholders have committed to injecting an additional 24 billion naira before the end of 2025 to exceed the regional banks' capital requirements ahead of the 2026 deadline. GCR recently reaffirmed Novo Bank's BBB rating with a stable outlook, citing strong liquidity, improving earnings, and sound asset quality. Despite the license downgrade, Nova will expand its branch network in Owerri, Port Harcourt, and Abuja while investing in digital infrastructure. Chairman of the board, Mr. Phillips Oduzwa, said the recalibration positions the bank from optimal growth and capacity building with a plan to return to a national license within 36 months. Meanwhile, Coronation Asset Management, a provider of managed funds and customized portfolios and offers investors access to diverse asset classes and tailored solutions, is set to list its Coronation Infrastructure Fund, CIF, on the Nigerian exchange, following a record-breaking 8.79 billion median series one capital raise, the largest debut of an infrastructure fund in Nigeria. The listing will see 87.9 million units priced at 100 naira each, made available to institutional and retail investors, providing greater access to infrastructure-focused investments. The CEO described CIF as both a strategic investment tool and a nation-building mechanism, channeling capital into critical sectors such as transportation, utilities, energy, telecommunications, real estate, and social infrastructure. Head of Asset Management, Mayowa Ikotun, emphasized that the fund targets high-impact projects, delivering long-term returns while addressing developmental challenges. Since launch, CIF has distributed over 1.7 billion naira in dividend across 2 income cycles and was recently named Nigeria's best performing median infrastructure fund by Gazette International Awards. Analysts say the NGX listing will boost market visibility for infrastructure as an investable category. And to end the business news this morning, Nigeria recorded a total capital importation of $5.642 billion in Q1 2025, a 67.12% increase from the $3.376 billion in Q1 2024, and a 10.86% higher than the $5.059 billion posted in Q4 2024, according to the National Bureau of Statistics. Portfolio investment led inflows at $5.204 billion, followed by other investments at $3.17 million, while foreign direct investment stood at $126.29 million. The banking sector attracted the largest share with $3.127 billion, representing 55.44% of the total. The UK was the leading source of capital with $3.68 billion, that is a 65.26%, trade by South Africa at $501.29 million and Mauritius at $394.51 million. Abuja FCT topped as the prime destination, receiving over $3.047 billion or a 54.11% of total inflows, followed by Lagos with $2.564 billion and Ogun State with $7.95 million. Standard Chartered Bank Nigeria Limited received the highest capital importation at $2.103 billion, ahead of Stanbic IBTC Bank PLC with $1.398 billion and Citibank Nigeria Limited with $1.052 billion. And that's it for now on the business news this morning. After the break, we'll return with an update from the markets of yesterday. Welcome back. You're still tuned to Economy and Markets here on BDTV, where we give you comprehensive insights into what's happening in the financial markets. I'm your host, Nneoma Ogbonna. Let's take a look at the updates from the market yesterday. Now, it was another bullish day at the Nigerian exchange as the all-share index climbed at 724.59 points to close at 144,769.37, marking a 0.50% gain. This extends the NGX year-to-date return to an impressive 40.68%. Now, the market capitalization rose to 91.63 trillion naira, while investors exchanged over 1.02 billion shares valued at 22.84 billion naira across 38 and 932 deals. Now, in the top gainers chart, it was a clean sweep of 10% gains. Boas Cement surged to 170.50 naira, while Nigerian animal wear closed at 29.70 naira. Nimet Pharmaceuticals closed at 7.70 naira, and ICO Insurance closed at 2 naira 64 kobo, and mutual funds benefits assurance rounded it off at 2.20 naira. And on the flip side, the biggest laggards were Living Trust, down nearly 10% to 5.94 naira, and UPDC rates, Academic Press and Mercure all losing over 9%, while Cadbury Nigeria dropped 7.35% to 63 naira. Now, among the most actively traded stocks, ICO Insurance led the pack with over 97 million shares, followed closely by Universal Insurance, Linkage Assurance, and Fidelity Bank with 1.24 billion naira in traded value. And we also have Veritasi Capital rounding all out the top 5. Now, let's turn to the global scene. In the US, markets dipped also. The Dow Jones lost over 0.14%, while the S&P 500 fell at 0.49%, while the Nasdaq Composite slipped 0.64%. In contrast, Asia was largely positive, having Japan's Nikkei rising to 0.64% and South Korea's KOPC gained 1.60%, while Hong Kong's Hang Seng added 0.64%. Now let's move over to Europe, where the FTSE 100 and the CAC 40 and DAX all posted modest gains. And finally, to the currency markets. In addition, the Naira traded at 1,526 Naira to a dollar, while it traded 1,769 naira to the euro and 2,029 naira to the pound sterling. And now that brings us to the end of yesterday's market updates. After the break, we'll return with a conversation about MTN's Nigeria performance in H1 2025. Welcome back. And in case you're just tuning in, this is Economy and Markets here on BDTV, where we give you comprehensive insights into what's happening in the financial markets. Now let's shift our gears and head to a conversation on the MTN Nigeria's performance in H1 2025. In a stunning reversal of fortune, MTN Nigeria has delivered one of the most dramatic comebacks in the markets this year in the corporate scene. From a staggering 519 billion naira loss in the first half of 2024, the telecoms giant has bounced back to post a 415 billion naira profit in H1 2025. That is not just a discovery, but an entire statement. Driven by surging data demand, strategic price adjustments, and improved macroeconomic stability, MTN service revenue jumped over 54%, while EBITDA more than doubled, crossing the trillion naira mark. The company is also pouring massive investments into infrastructure, launching West Africa's largest Tier 3 data center and expanding its fintech footprint. But this momentum, is it sustainable? And how might it shape investors' sentiment in the months ahead? Joining me now to unpack the numbers and outlook is Kayode Eseyin, a research associate at CardinalStone Securities. Good morning, Mr. Kayode.
Yeah, good morning.
And
Thank you
welcome
very
to the
much for
show.
having me.
Welcome to the show. Now, quickly, let's jump right into this conversation with some of the top questions. So, what were the main drivers behind this robust turnaround in service and the total revenue?
So I think for the first half of 2025, or at least at the start of the year, there were talks about a tariff increase or implementation of a repricing for the entire sector as a result of the fact that we haven't seen anything of such for close to a 10-year period, right? And though, I mean, towards the end of last year, it was starting to look like it became very clear that the tariff implementation was going to happen. I think the only question as of then was when it was going to happen. And so following the NCC's approval that came in around February, late February, if I recall correctly, it was clear that the modes for the sector, or particularly for MTN, were pointing significantly upwards. And so the main driver for the earnings recovery, though that's not the only support they got, was the price increase that they following the approvals. And so as a result, if you check the earnings release, we saw strong growth in both voice and data revenues. Data in particularly grew by about 69%, and that's partly because of the tariff increase of about 50%, like I mentioned earlier. But interestingly, right, we are seeing that even despite the price increases that came in, with demand for data products is quite robust and strong. Because even going by NCC data, for example, we saw for that total data usage for the entire industry for at least the most recent data that has come out from the NCC shows that we are currently even higher than average data usage in January, which is interesting because generally speaking, when you have a 50% price increase, you don't expect, the normal expectation, depending on elasticity of demand anyway, is that there will be some pullback in prices. And though there was an initial pullback, the data usage has recovered strongly, indicating that there is demand for these products, and these products are relatively inelastic. And so to your question, the main drivers for the price increases and still very robust demand for data services and voice.
Okay, so what specific cost and efficiency initiatives supported such strong margins that we saw from MTN half this year?
Oh, okay. So for margins, right, one of the benefits of having a bad year really is the fact that it gives you an opportunity to basically learn from your mistakes or find out or figure out a way to do business better. And that's what MTN in particular did the last year and the past 2 years. So for one, they tried as much as possible to de-risk their balance sheet. That is by making sure that quite a number of their sources, of their cost items rather, are localized or nairalized, if you will. So essentially before, they were exposed significantly to FX volatility as a result of the fact that a large portion of their lease payments were in dollars or dollarized, not necessarily paid payments in dollars. Most of them actually were paid in naira, but they were dollar linked, and so the devaluation meant that margins were pressured on that front. And then also there is also the energy inflation passed through from their lease components. And so the renegotiation of the lease contracts essentially meant that the pass-throughs from these components are capped. And then the move to deleverage their balance sheet, to move away from having high dollar liabilities, also meant that at least finance costs and associated costs associated relating to dollar components were minimized. And so the lessons from last year were taken, and they restructured their business operations and even their balance sheets to protect themselves from FX devaluation and energy price volatility. And we are starting to see the benefits of that.
Now to the next question. You see, in H1, we saw MTN's Capex hit over 560 billion naira. How are these strategic investments expected to contribute to the revenue and margins in the medium term?
Okay, so for MTN, right, if you look across their history, the company has been quite aggressive in investing in the Nigerian space. I think at some point they were the poster boy for, and I think they still are, for investing in Nigeria and believing in the Nigerian story, dating as far back as, they have over 2 decades of business experience in this industry. And the momentum that we saw, at least going by their history up until the FX and volatility crisis, gives reason to support their optimism in the country. And it's no surprise really that following the tariff implementation, right, they are ramping up Capex again. And that's because, like I said, they've made quite a lot of investment in Nigerian story, and they have reaped quite the profits anyway. And so going ahead, especially when you look at the Nigerian healthy demographics and the fact that, like I said, the demand for their product is relatively inelastic, and so there is more than enough reason to cheer. And so going forward, what we expect is that this Capex surges will continue, though in H1 in particular, part of what we saw in the H1 Capex was a front-loading exercise, but nonetheless, Capex for this year would likely come in strong as the company tries as much as possible to ramp up its network coverage, extend its both 4G and 5G coverage, and just ensure that data services and even voice services are available to subscribers as when it is needed. And so the impact of this again would mean that MTN is likely to continue to remain its industry leadership position. MTN is also expected to benefit significantly from this expanded reach and coverage, and this would bode well for shareholders in the long term. And so the investment we are seeing in that space is likely to continue.
Okay, let's go to their share price. This year it has reached over 470 naira. Are the fundamentals strong enough to support the rally?
So at current prices, okay, let me start from where we are coming from. I think sometime last year, MTN was trading way below a 200 naira mark, which as of then, depending on how you choose to look at it, made a lot of sense, especially if you look at the fact that the company's equity position was quite was essentially negative, right?
Yes.
And even though they were starting to recover, there were signs of recovery then, it remains to be seen how far or how fast the recovery was going to come in, right? And so in Q1 this year, following the tariff increases, I think that's part of when the market really changed in terms of its sentiments towards the stock, because following the Q1 release, that's when the majority of the bull run started to come in. And then going by their Q2 numbers, right, it's starting to look like the market optimism is quite justified, especially when you look at the earnings standalone and say even try and analyze it over a 1-year period. You start to look like MTN today is significantly even better than it was, say, 3-4 years ago, despite the fact that they still have some weakness in terms of their equity position. And even on that point, right, the expectation is, going by their Q2 run rate, is that by Q3, Q4 unfairly, but mostly Q3, the company's equity position is likely to turn positive, right? And so momentum is quite strong for the company in the current year. And then if you even look far ahead, say 1 year, 2 years, 3 years from now, it's starting to look like MTN might actually outperform its own historical trend, especially with the added impetus or strength of tariff increases that have been granted to them. And so it's really starting to look like the value was justified. And though it's a bit elevated at current levels, I think this is the all-time high for MTN, 471, 480 levels. I think it traded at 480 at some point.
Yeah.
But if you look at it from the fact that it's an all-time high, it might start to look really worrisome. But if you look at earnings forecast or earnings momentum for the company, you would say that, I mean, Q2 earnings standalone was basically an all-time high for the company. So maybe indeed it's starting to look like the rally is supported by strong fundamentals. But yeah.
Okay, so you've been speaking about the tariff increase. Of course, is one of like the major the major influences. But what extent do you think that the tariff increase drove the investor demand for the stock?
Okay, so I think that was the major kick for me, because yeah, the growth story was there. Q4 earnings was positive. Q1 was even better. I mean, depending on how you look at it, right? But the tariff kind of set the pace really, because it just indicated to the sector as a whole that things have changed. It was a major turn around the corner, especially because most of these telcos haven't been able to raise prices for over 10 years, right? And despite that flattish pricing, they still were able to report significantly impressive growth within that same period, relying mostly on volumes. By volumes, I mean data usage per subscriber, voice usage per subscriber, and the likes, right? So, and that momentum is still there, because the main drivers of that momentum has always been Nigeria's youthful population, large population to even start with, and the fact that we live in a connected age, and people are increasingly reliant on technology as a means of communication and staying in touch with their loved ones, and even as a means of working really. And so the demand story was there, but the pricing story was off the table basically as a result of the regulator's disposition, right? And so bringing back the pricing disposition to the table essentially signaled to the market that, okay, this might be the start of a new era for these telco players, and that's part of why I would say the majority of the reason as to why investor demand for the stock really picked up.
Okay, so when is the return to positive shareholders' equity expected? And what do you think are the expectations for dividends or capital raises?
Oh, okay. So I'll take the dividend question. Let me start with the equity position.
Okay.
And so the equity position is likely to come in positive by the end of Q3, going by their run rate. And I think that's, like I said, because of the earnings momentum that the company was able to deliver in Q2. What they have to do is to repeat the same performance in Q3, and I don't see why they can't. If anything, I think that's even more like a bear case scenario, right? Because the company has a track record of outperforming its own historical trends, really. And so we expect them to come in positive at Q3. And on dividends, right, the major reason why the company hasn't been able to pay dividend for the past 2 years was the fact that they have a negative equity position, right? And so what that means is that the moment this equity position is now positive, the moment the balance sheet restructuring, so to speak, is complete, right? There is no real encumbrance on them paying dividend. And so though it's a bit too early to call, there is a possibility, there is a world where MTN might actually deliver some dividend to shareholders this year. And by this year, I mean FY25 numbers. And so it is like very likely, but if I were buying the stock ahead of dividend, I won't put too much thought into that, because if I told there will be a dividend this year, going by the earnings run rate, it might not necessarily be up to historical levels, especially because they just recovered from the negative equity position, and with the normal expectation or the normal thing to do is for them to essentially build up some level of buffers for their balance sheet to protect against uncertainty. So, but as regards dividend, there is a possibility where they might pay something this year, but I mean, it's from next year when we really start to see MTN return as the dividend king that it used to be. I think going back as far back as, or at least pre FX loss era, MTN has a history of paying about 70 to 80% of its profits as dividend. So we might start to see that coming from next year. But for this year, if at all they do any dividend, it's going to be signaling as they try as much as possible to build up their buffers in the immediate. As for capital raise, right, when the FX issues started, and it was starting to look like they might have some equity position issues, right? There were talks about whether they come to the capital market to raise capital to support the balance sheet. But I mean, now that the crisis is basically over and we are seeing the company return strongly to strong earnings, it's starting to look like coming to the market to raise capital for the balance sheet might not necessarily be it's not a necessity for them anymore. All they have to do is maintain the current earnings momentum and they'll be out of the woodwork in that phrase. Though there has been talks about the company coming to the market, that's the parent company coming to the market to sell some of it, to reduce some of its stake rather in the Nigerian subsidiary. And we don't have an exact timeline on that, but going by the body language of the parent company and the group president rather, the indication we got was that they would like the company to return to a positive equity position first before they come to the market to sell their shares. And it only makes sense, right? You don't want to sell basically at the bottom of the barrel. Now that we have seen strong earnings momentum and share price momentum and the likelihood of a continuation or a return to a positive equity position in the third quarter of the year, we think that the imminent capital raise, or not capital raise, MTN parent company is likely to come into the market anytime soon to sell, to reduce its stake in its Nigerian subsidiary.
Or we let you go. Some analysts are looking at the target price to be 560 naira. What is CardinalStone projecting? What do people think is going to be the target price?
So currently, the stock, like I said earlier, has witnessed quite a very strong positive earnings momentum. Though I'll stop short of giving an actual and a definitive target price, but I would say that going by the earnings momentum and just general quick evaluation of the company, there's a high chance that we might see the stock maybe above 500 sometime before the year runs out. But I mean, that would depend on a number of things, right? We still also need to look at the fact that there's a strong expectation of profit taking, especially considering the rally we've seen in the first half of the year for the stock. So I think currently we just maintain a cautiously optimistic outlook on the ticker. But overall, it's a fantastic company with strong earnings momentum.
Thank you so much, Kayode, for staying with us and giving us your insights on this very important topic today. And to our viewers, we also want to say thank you for sticking with us. This is Economy and Markets. I am Nneoma Ogbonna.